targets for Nifty, Bank Nifty and stocks. Already in many webinars we have looked at what is a Fibonacci number, what is a Fibonacci ratio and how you should apply that. Okay. We have also had discussion on Fibonacci fan. So these are topics which have been discussed in earlier webinars. So, but anyway, we will just take a few minutes to recap what we had in the past webinars, and this time we will show more in application. That is, what are the important levels? That is, for position traders, they would like to understand to what extent probably the rally can take place before some important resistance comes, so that they can place themselves for a buy or sell accordingly. So we will use Fibonacci ratio because there is no one indicator always which you can tell you that this is the way or this is the only approach. So good traders normally try to use a few indicators. It should not become too clustered in the sense that you should not use too many indicators, but you should use some important indicators so that you gain confidence. Now, for example, the important moving average have been used, like for example 200-day, 50-day moving averages have been generally used to identify some short-term trend and long-term trend. That is, 50-day moving average is normally used to identify whether there is a change in the short-term trend. 200-day moving averages will be used to identify whether there is a major shift in trend itself. So now, similarly, when you use that, then probably you also use one oscillator like RSI in order to know how the divergence, whether there is any divergence. So whether some sort of a top is getting formed or some bottom level is formed. So this is another indicator. Third is, of course, some people they use trend line in case if you know how to draw trend lines properly. Trend line can be used. Simplest is that in the normal Doe theory, higher highs, higher lows, those things. And then you have Fibonacci. So some 3-4 important indicators. You apply across multiple time frames depending on whether you are a long-term trader, medium or short term. The long term trend means that probably you would like to go along with the main trend, which is a monthly trend, and then in between you want to take profit, you look at the weekly trend, and in case you want to have a shorter time frame, then you use for the daily. And then if you are an intraday trader or just want to keep shifting the position a little more frequently, then probably use hourly trade. And if you are a pure intraday trader, in that case you may even use a 15 minutes. So the time frame that you use will depend on what type of trader you are and how much of quantity you are doing. Now first let us look at the big picture using Fibonacci targets. So for which we will straight away go to the charts, and with the help of the charts we will find out what are the important target levels for Nifty based on the last important low before the last important high before the pandemic, that was 12,450, and at the outbreak of the pandemic and lockdown, markets in the March-April period of last year came down to 7,525. So based on this of 12,450 to 7,525, what are the upside projections? Now Fibonacci ratios and numbers can be used in different ways. For example, there is no sacrosanct thing that it should be used like what I told you, that between 12,450 and 7,500. Somebody can use it even from, say, the Lehman collapse period of 2000 to 12,450. And then based on that, you can also make your own projections based on that. So it all depends on what type of trader you are. And based on that, you can make projections on that. Okay. So now let's look at some of those things which are probably looking at the trades. Now we'll go to the chart. Investing.com is the chart normally we use. So let's go to the big chart, that is monthly chart. Now I told you that based on this 12,450 and 7,525 we will make a projection. So we'll go back. So what is how do you project? 12,450 was important high, 7,525 was the important low, right? So what is the difference here? Difference is 12,450 minus 7,525, this is 4,925, right? So 4,925, we apply Fibonacci ratios, which are 0.235, which we have seen earlier, 0.386. 0.5 is not a Fibonacci, but generally used by traders, 0.618. Then you have 0.765 and then 1. Okay. So let's apply this and see. Now 4925 into, let us say, 0.235, the first one. This is 1157. So this 1157, let us add to 12,450. Okay. That comes to 13,600, 610. So this is one important resistance area when the market started to rally. We have also seen that once a resistance is broken, that itself becomes a support. So keep in mind 13,610. Then the second thing is 0.386. So 4925 into 0.386. Right? So 4925 into 0.386. 4925 into 0.5. Okay. 4925 into 0.618. So let's see this. For which we will add to 12,450 plus. All these things we will add to this. Okay. So 4925 into 0.386. That is 1900. So this area is 1900. So 12,450 plus 1900. 14,350. 14,350. Now 4925 into 0.25. This is 2,462. So if you add to 12,450, that is 14,910. This is 4925 into 0.618. Plus 12,450. This is 3,043. So plus 12,450. 12,450 plus 3043. Sorry. It is 15,493. Okay, till now we have only come up to this. Okay, so we have seen what are the important levels. We have seen earlier that we have seen is 13,600, 610 or so, 14,350, 14,910, 15,493. Now let us look at the chart. We'll look at the weekly chart. See, this is, we had talked about 15,490, right? 15,431, very close to that. We have also talked about 14,350. 14,350, right? So I think. Okay, this is, 14,350, 14,910. Okay, now. So this is there, it exceeded 14,350 and it went up to 14,750. Now on correction you can find the market coming to 13,600. This is another important level. We have seen this important level right now. See 13,600. So 0.235, all these two things stood up. 14,350 was exceeded, right? So the moment 14,350 was exceeded, okay, when it fell, it took support at 13,610, right? So similarly now 15,493. So this is not an important Fibonacci number, whereas this is an important Fibonacci number. So what we can expect is this will hold, 14,350 will hold. Now the last correction which we got was 14,565 or so. This correction is 14,467 in Nifty future. See Nifty has come to 14,467 and that is what this 14,350 is what we had projected. So some plus or minus 100 rupees it always comes. So this means this becomes a very important support. So if this is broken, probably we can expect more amount of a fall. So now we have been able to get our points very clear, right, till now. So assuming if the market continues to go up, what is the next target above 15,470, 450 or 470 that has been reached till now? So we will now go to the next Fibonacci, and that is 0.765 and 1. So now we have got 4925, right? So 4925 into 0.765 and then 4925 full amount, right? So on 12,450, let's add this. 4925 into 0.765. This is 3767. So if you add this to 12,450, that comes to 16,200, 217 or so. If we add this full number, 12,450 plus 4925, comes to 17,375. Now this is far off, okay, but this is the next target. So in case a 15,490 or 470, 60 or 70 is penetrated, then the next important target that we can probably look towards is another 700 to 800 points on the upside, which could be 16,215, right? So you can keep in mind that right now the market could be, we have seen 14,350 we said, but it came down up to 14,450. So we will take this as a support instead of 14,350. As long as this is not broken, then we will look towards the next target towards 16,210 with an intermediate resistance at 15,450. Right? So if this is broken, then probably we have the 13,600. That's all. So now you are an investor, you decide where all you want to buy. Probably when the market, when the fall takes place, you take place right now with around this 14,000, close to 15,000 level. So we have seen 0.5% Fibonacci is around 14,910 or so. So maybe that is one place, okay. But that has not been a place where the market has held on to support. In fact, it went a little lower and then came back. So let's look at that in the daily chart. So this is the low, which is the 14,860. Okay. So 14,850, 860 could probably be one important this one, and failing which it can go a little lower. So these are the target areas. These are the target area 14,860, 14,450 and all. And next thing will be 15,450 and then going straight away back out to 16,210. So we can position ourselves for this, and also this area. If you look at it, it was a 50 moving average support. So we will draw our trend line also based on that. So this is the trend line. So we should get a support at around that level, 15,009. So in case if it goes down, from this place to this, I think 14,860 to 14,910 should give us some support. And so hopefully, let's see whether we are in a position to get some support closer to 14,860, 870. And today it closed at 15,030 or 40. And not this week, if you look at it, today. Every time it goes up, I think last week also it went up 15,273, then got pushed lower. This week also it went up and got pushed lower. So there seems to be a lot of resistances which are also coming on the upside, which is creating a lot of worries about the sustainability of this particular rally. And there are a lot of stocks which are now started to trade very closer to the 50 or even 200-day moving average. And pretty much technically stocks like TCS, Maruti, are not in great shape, technically speaking. Asian Paints, all these stocks are definitely now trading at some bearish levels, Bearish level resistance is not exactly below 200-day moving average, but very closer to that. So I think that it gives a lot of this one, that is fear, that whether this rally will sustain or whether there will be some more correction, possibility of a correction that can come, which means if this particular level is going to be taken off, the 50 moving average is going to be taken off, then in that case there could be a greater fall which could be towards the 100 moving average, and that could probably come in closer to the 13,600 levels or so. So if you are an investor, then you should always add your positions at some of these moving averages, 50 moving average, 100 moving average, 200 moving average and all, because you get a chance to average it out at these particular levels. And if it falls below 200 moving average also, after some time it will come back. So there's nothing to worry about it. The market will come back at some stage or there. Now, because of the higher valuations and also fear of another second wave of corona, there is some sort of an hesitation in taking the market higher immediately. And anyway, it has gone up significantly. So probably some cooling is possible. So let us wait for correction for investor to get into this market. And as far as your trader is concerned, then in that case you have a very clear stop loss trades, which we have already said that either you can put it below a single day low or a 2-3 days low, depending on what type of stop loss you would normally decide to take. So this is where this is what it is. So I think now Fibonacci targets, we have used it to show it to you about the upside targets, and also we have used the big levels. Big levels in the sense 14,000, 12,450, 7,525. Based on that, what are the target levels and support and resistance levels we have identified with the help of the Fibonacci. Now I told you also that you can use Fibonacci in different ways. One such is that for identifying what are the important levels to which it can fall. This is a low, this is a high, right? So you can draw a Fibonacci based on these two levels, because these are two. This is one important level, this is another important level. So now let's look at the Fibonacci numbers based on this. So this time it came 14,511 was the important 50% retracement level. So it came very closer to that 15,460, 470, and 0.618% was 14,282, which we saw probably is another important level. So right now, if there is a fall, I think we could still expect some sort of a support either to come first at 14,740. Now right now the trend line is there. So even if there is a fall, I think we should be getting it closer to the 14,740, 14,500, 14,450, then 14,300. So at this point of time, we still feel that we are in for some sort of a correction only in the market, and probably that correction can definitely halt somewhere closer to the 14,300 and before it starts to bounce back. Okay. So this is, so you can wait for your levels to trade. One such level probably could be some small dip, then probably you can have a greater fall towards 14,300 and 13,600, where probably you can hide for the investment purposes. So this is the this is the Fibonacci ratio, which is based on Nifty. Okay. Now we will look at Bank Nifty, then we will also look at some stocks. The Bank Nifty, this is also a weekly chart, and this let's draw the Fibonacci from this level to this level. So the first fall, normally in the case of Fibonacci, suppose if you are drawing from good levels, okay, that means let us say a weekly low, then the first support that should come should be closer to 38.2. In case if 38.2% retracement is taken off, then in that case there could be a greater fall towards 0.618, because 0.5 can hold or 0.618 it can come. So right now it has held on to that 38.2% retracement. So any fall that is from this low to this 38.2% retracement fall could invite a bigger fall, which could be even up to 61.8%, which is 32,704. So if 34,665 is broken, then based on Fibonacci, we could probably still expect 32,700, approximately that particular level, to come in Bank Nifty, which could still be only a correction. So right now we are seeing Bank Nifty also as some sort of a possible corrective move, which can probably take it to some level which is approximately near the previous top, which is 32,700. So this is this you can use in the case of this one, because if you see the last 1, 2, 3, 4 weeks, I think Bank Nifty has struggled as far as the rally is concerned, because if you look at it, this particular week also, the week close was quite weak, and this week it rallied but could not take off the last week high, and again today it fell after going very closer to the previous week high, which means that there is a lot of loss of momentum as far as the upside is concerned. So we should be a little bit careful about this. So I think we should probably look towards exiting some long positions on any small rally which could come tomorrow, day after tomorrow, and then look towards probably re-entering it at some lower levels. So clearly a slight concern is there as far as the market rally is concerned, so which probably could lead to some sort of a correction in the market. So now this is the this one, but if you look at the big picture there also, this is a weekly chart, and let's look at the monthly chart. So in the case of a monthly chart, of course the last important high has been this. So so we will draw the Fibonacci for the entire move, so the now this is the see, the last important point was this 32,732, and then the low was 29,539. Now if I keep the Fibonacci this exactly as 23.2% from the Fibonacci tool, this could have been, this is a very important place of resistance that has come, that is 37,894 at 38,000. So now since it has gone up to that level, there is always a chance that it can drop up to 32,000, the same level, that is 32,732. That is what we also showed in the Fibonacci, from this level to that level. So now if we take it from the bottom, that is almost at the time of the pandemic, from there to the present last month high, then the first support comes closer to 32,732, which I think will hold. So right now any fall in Bank Nifty, I think it should be able to get support closer to 32,735. Now you may wonder that right now it is at 35,596, 36,000, and whether are we talking about 32,100, which is a 10% fall. The Bank Nifty and all is quite volatile. Normally if Nifty corrects by 5%, Bank Nifty will correct by 10%. So to that extent, we cannot rule out the possibility of a Bank Nifty coming down up to 32,725 before again it starts to move up. So because this is a blowout month, and normally after a blowout month, if you see in many periods, you see some sort of a pullback. Now we can see here this one. So after a considerable rally, you get a blowout, and then for the next 2-3 months it was down. Similarly, you can see like this. So probably this is an area of concern. So probably we have to wait for some sort of a cooling off effect as far as Bank Nifty is concerned before you could place your trust again for a rally to take place. So clearly the Fibonacci ratios are highlighting a possibility of a 61.8% of from this level to this level. A pullback can come closer to 30,730, and that is being confirmed by a 23.5 retracement of the entire move that took place from last March, April to till last month. So let's wait for correction before we do that. And if we look at it also on a daily basis, now we come to how we can use it even on an intraday basis. So now we'll go to the hourly chart. So let's look at suppose since this was an important low and market climbed up to this particular level. From this level, that is from where the correction ended, from here to this place, let's draw the Fibonacci. So this area now today the 23 point this was a 23.5% retracement for this move, which was at so this was the 36,087, and then it was 35,850, and then if you see the 61.8% retracement held on support, 61.8% retracement of this entire move, it was able to hold on. So 76.5. So 76.5% retracement, it was able to hold on. So now Bank Nifty probably could, we have to wait and see how much the Bank Nifty can rally back. But we should put a 61.8% of this particular move and see what happens there. So let's look at the retracement based on the Fibonacci for this entire move of what happened today. So we have a possibility that in case if it doesn't go lower below this, then there can be a rally which can pull it back to 35,960, 970 levels. So we need to be careful about the 35,970 levels, and then probably at that point of time we should take a call whether there will be a further rally or not, because there is a chance that it can go up. So on an intraday basis today the market has closed very awfully bad, right? So awfully bad. So let us say on Monday it opens a little higher, but whether that rally can still take place much above the R1 of that particular day, that's going to be highly questionable. So if it at all rallies back to 35,970, which probably could be the R1 also, I'm not very sure about it, we are not calculated. But if it comes very closer to that particular place, then I think it can become a sell. It can become a sell, because today if you look at the bar chart for the entire day, see this is a completely a very bearish chart. That is in candlestick pattern. This is a very bearish formation, and it's a completely it is engulfed the previous candles. So it's engulfing bearish candle, and that's such thing probably could invite some more trouble for the Bank Nifty. So it could probably go back to this low or this low. So any rally right now probably can meet resistance, and let's look at the resistance area. And also since it is closed below this particular high, this high is 35,825. So there's a chance that probably when it rallies back, it could go up to 35,825, 827 and then fall, or it can go even up to this, which is 36,077, because if it has closed below some important day's highs, then on a pullback probably we could get some resistance in those lines. So if you look at these days, I think probably some okay, now see this day it has closed below this day's high, right? So when the rally took place, it had a resistance at this place. Just see if since this day it has closed below this day. Okay, so now this particular high becomes a resistance place, and for 1 or 2 days it was not able to rally above that. So here also if you see this day close is below this. Okay, So on any particular day, rally, you see on this day, when the rally took place to this, then we had resistance at this place. So only when it is crossed, then in that case it was able to go up. So to that extent, Bank Nifty's resistance can come very closer to this particular level, which is 35,825, 827. Okay. So any rally, if it comes 300, 400 points, 300 points, or 1% from this place on Monday, then probably we should look towards making some sort of an exit and then waiting for this one. So I think let's look at that this one. And second thing, that as far as Nifty is concerned, before we go to the stock as the Reliance is concerned, one thing I want to point out to you, that normally Nifty as a characteristic of having okay. Now normally if you see, let's go to the monthly chart. Okay. So Nifty in this entire move which took place, there has been generally 1,000 points fall in bigger correction. See, this was 9,900 approximately, and this was 8,800, so 1,100 points. Here if you look at it, it was 11,794 or 11,800, and this is 10,800, so 1,000 points. And here if you look at this is 14,750 and 13,600, right? So 1,150 points. And here of course there's been slightly smaller correction, 15,530 to 14,467, approximately something like 900 points. So on average, if you see, something like 1,000, 1,100, 1,200 points is the correction that comes in Nifty. And whether it is only a percentage correction or a point correction, I think we can always dispute about it. But here if you see, previously in previous periods also, though these are all for a very short period of time of 3-4 weeks, but previously it used to take a little more time for the corrections to end. But here also if you see 12,100, the 12,100 to 10,650, so it was a 1,300, 1,350 points of correction. So generally the correction here, let us say here, this is 11,750 to 1,000. This is slightly bigger correction. So this is 11,750 to 10,000. This is a 1,750 points of correction. Okay, which is more than 10%, which is around 15% of correction or so. So generally speaking, in this particular move, it has been a correction of around 1,000, 1,100 points. So we should keep that in mind. In some cases, people say it has not been corroborated yet, but you can say that no, there was general feeling that all these things are percentage corrections. So 12,100 to 10,000, 16,500 points, which is approximately 12%. 12%, 10, 12% is a normal correction that takes place. And anything above that, it comes up to 15, 16%. That's what we saw here, 11,750 to 10,000, 1,750 points. And 1,750 points on 11,750, it went a 14.5% correction. So generally, the markets generally hold on to small corrections, hold on to 5%. Otherwise, it goes to 10% and then it goes up to 15%. So 20% correction is normally not there much. Here it was 8,968 to 7,968. So again, it's only 1,000 points. 1,000 points. But 1,000 points on 8,900. So either you can say the correction was around 11.5%, 12%. So we can say that the correction is 11, 12%, or we can say it's 1,000 points. There, 1,000 points is 11, 12%. There, if this is going to happen to 11, 12 points, then probably we should see something like 1,800 points. 1,800 points means then probably 15,400 should come to 13,600, 13,600 levels or so. So we need to work it out. And here also, if you see this 13,600 to 14,500 was 1,800 points. of rally, and that is that comes to 13%, 2.5%, 13%. So probably, you see the rally, if it is quite steep from one level to another level, then the rally that takes place from one bottom to another bottom is also around 11 to 12% before some correction takes place. So if it is going to rally from 14,600 levels, from where it has come down, then in that case you can have into another 12%, which should take it to 16,350. That is what we are projected using the Fibonacci from a bigger level. That is, we are projected from 12,450 to 7,500. We have projected that to be around next line 16,210 or so. So based on this 10-11% from 14,670 or so, it comes closer to 16,300. So next important targets could be something like 16,200 to 16,300 levels, if at all the rally continues to take place. If the fall takes place, then below 14,500 or so, we need to be careful about it. Okay. So this is where the Fibonacci ratio stand as far as Nifty and Bank Nifty is concerned. On the intraday level, if you look at it, so So we have already seen about the intraday support resistance as far as Bank Nifty is concerned, and we will also look at it for the Nifty. Yeah. Now Nifty has also fallen below this particular day's high, right? So it's also fallen below this high, so which is 15,125. So any rally from here, probably we should see some sort of a resistance coming closer to 15,125. So this is a place where probably we need to be looking towards making our exit on intraday basis. In case if you are already holding long position, then in that case it is better to look towards some sort of a winding up at around 15,125 tomorrow or day after tomorrow, and then probably look towards buying again. Because here 15,125, I think for a long time, the 15,125, 130, it didn't clear for 3-4 days. So that could become a resistance place now. And if it rallies further, then in case 15,210 or 215 could also be a resistance. So just keep in mind for intraday thing that since it has broken below some important highs, then those highs can itself become some resistance points. Okay. Now we will look at one or two stocks, and let's look at Reliance Industries. So this is Reliance now, and so we'll look at the big chart. See, Reliance, the same thing like Nifty. Now Reliance had a fall from 1600 to 867. So that difference is 1600 minus 867. It is 733 rupees. So Reliance fall was 733 rupees doing last year. Okay. Now the fall took place from 1610 or so, right? 1610 or so. Now if you add the same 733 to this, then it comes to 2343. Let us look at Reliance now. This time, in this I it went up to 2369, just exceeded by 25 rupees only. So that was a very important. Now this will help you to get confidence regarding the Nifty levels which you have spoken, the resistance level of 16,250 to 16,300, then subsequently above 17,000, which we demonstrated. Look at Reliance. Now when the fall took place, this entire move of this high to low, I think it was just like a mirror image, opposite side. The same amount of rise was there from that particular peak. So now it started to fall, you can just look at the Fibonacci from this place, because this is now an important low. So all Fibonacci from this place will hold. See, this time it fell, and the 38.2% retracement is 1790. I think it came closer to that. 38.2% that is 1835. The Fibonacci ratios for 1790, so it took support. So for Reliance, if you looking towards any investment, I think no, for a long time it had a base at that particular level, and it has also now I think probably now on a monthly chart also it has broken above some important month highs, which gives a lot of strength towards feeling that probably 1790 will hold. So any dip of 1790 towards 1790 can be bought. So what are the dips to which we can buy? So that for which we look at the daily chart. Okay. Now from this low, let's look at from this particular low. We'll draw the Fibonacci. Okay. So we have support coming at 2080 now. This is 38.2%. So any fall right now, important support will come closer to 2080, then 2030, 1982. So if you are not waiting up to 1800 levels, then in that case it is better to start accumulating Reliance at around 1985. I think probably it will. There's a very good chance that probably 1985 itself can hold, and then because if it is to rally, in that case you will get that 2233 back very shortly, which means you will easily get a 10% rally in Reliance from 2000 levels. So Reliance closer to 2000, which is 1982, based on the Fibonacci of this particular move, it looks to be a good support level. Now overall big support level, it comes closer to 1800. So you can keep adding in case if it goes right up to 1800 also, and only below 1800 we need to be careful about Reliance is concerned, and in that case we need to make an exit in that particular situation. Now I told you that Reliance looks to be okay, but there are a lot of stocks which are not doing that great. Now Maruti is one. So you look at Maruti, this is of course a daily chart, and monthly chart also we look at it. I think unless some month high is cleared right now, I think it is better to wait as far as Maruti is concerned. Of course, there will always be on the fall, there will be a support, and the support levels can come these levels. Now I'll draw the Fibonacci number thing. So this also held on to 38.2%, which is 6,699. Okay. Now there is a resistance which has come right now, and probably it has to clear this particular level before it starts to make an up move again. This has come as 7,384. So I think there is a possibility that 7,385 can be an important high for the time being, and next month if it starts to clear then again probably Maruti can be bullish. So as long as that is not met, then from 6,700 there is a possibility that it can go down up to 6,200 or 5,665. I'm not saying that it should happen, but in case if there is some bearish situation that develops because of global reasons or because of the pandemic issues, then in that case Maruti can easily slide down to 5,665. Of course, after which it will start reviving. So the Fibonacci ratios are the place where the big ratios are the place where you can look towards investment. And so the three places of investment that probably you could have thought of doing is 6,700, 6,200, 5,660. So that means you will have definitely average which is 6,180. From where you will make definitely some money. Now if we had the same look at it also some time back, now you would have done this from this particular level. Let us say last year, let us say we did some investment based on this Fibonacci. Okay, so let us say we did from 38.2% up to 61.8%. So the last thing that would have done is up to this, and of course 0.765 came up to this. And so let us say if I done at 38.2, 0.5 and 0.6, then probably last year we would have picked it up something like an average of 6,600. Might not have made money, big money, but we would not have lost much also, because the probably then it went up to 8,000 or so, 8,300 or so. So still we would have got some decent return. Decent return we would have got. But what it requires is sort of a patience. So investors definitely in blue chip stocks will make money if you keep buying on dips. So Maruti is one example, and Reliance is another example. So just identify some important blue chip stocks, which probably can be bought on dips as far as investment is concerned. Of course, as far as day trading is concerned, you have to look at the immediate support and resistance before you go for a buy or sell, and for which we have already highlighted that if it is on this particular day. Now let us say today, see there's a big fall today, and which are the levels which probably it is now, see this particular high. You keep an eye on this particular high. If it comes, if the Maruti pulls back on Monday, then this high, which is 7,175, can be a very important resistance. Then probably it can also have a resistance in case if it still pulls back a little more, it becomes 7,262. So I think it is Maruti now on intraday on tomorrow when it pulls back, 7,125 and 7,250, 260 are levels for going short, and you can put in a stop loss slightly above 7,265. So this is how you use for intraday. So and also if you look at the from this particular low to this particular fall, let's look at the Fibonacci. It will also give you some indication. So we have 38.2 coming at 7180, 0.5 7220, 61 point 7259. So that's what I told you. So these are the levels. Probably you can look at 7180 and then 7260, 59 or 60, which I told you. Then put in a stop loss about 7260. That's what I told you. So I think no, you should be looking more towards selling off at these particular levels of this one on intraday basis as far as Maruti is concerned. So you can use the Fibonacci whether you want to go for an investment call or whether you want to go for a day trading call. Okay. So this is how you have to use Fibonacci. But once you know the target and ratios, how you use it, it depends on your own learning and also your own experience of how to use Fibonacci. Okay, thank you very much, and looking forward for another session on Monday and next Friday on illustration of options versus futures, options versus cash market, how to replicate. We had webinar last week, and we will continue with and also this on Monday. So we will continue with some illustrations in coming week. Thank you very much. Now, if you have any questions, please ask. Thank you. Thank you. Okay. Thanks very much, and happy weekend. Thank you very much. Bye.